Let's review how to get pre-approved for a mortgage. In the world of home buying, think of a mortgage pre-qualification as a learner's permit, while a mortgage pre-approval is a license to drive. A pre-qualification letter can get you on the road to homeownership, but doesn't prove you can go the distance. With a pre-approval letter, you're in the fast lane. It lets real estate agents and home sellers know you are serious about buying a home. Is a pre-qualification the same as pre-approval? Pre-qualification is a good first step when you're not sure if you're financially ready to buy a home. A mortgage pre-qualification is usually based on an informal evaluation of your finances. You tell the lender about your credit, debt, income, and assets, and the lender estimates whether you can qualify for a mortgage and how much you may be able to borrow. Pre-approval is the next step if you get a thumbs up during pre-qualification. During the mortgage pre-approval process, a lender pulls your credit report and reviews documents to verify your income, assets, and debts. If you're confident about your credit and financial readiness to buy a home and you're ready to start shopping, then you might skip the pre-qualification step and go straight to pre-approval. A mortgage pre-approval is an offer by a lender to loan you a certain amount of money for the purchase of a property under specific terms. The offer expires after a particular period, such as 90 days. Pre-approval is not a guarantee you will be given a loan, and the mortgage can still be denied. A home appraisal must be completed before a loan can close to ensure you aren't paying more for the home than it is worth. Also, the lender's offer may not stand if your financial situation changes between pre-approval and closing. Once you are pre-approved for purchasing a home, you will want to be financially boring. Things not to do after you're pre-approved for a home loan include applying for new credit, such as for a new car, making large purchases, such as for new furniture, or missing existing loan and credit card payments. What is a pre-approval letter? Once pre-approved, your lender will issue a pre-approval letter. This document indicates the type and amount of loan for which you're approved, among other things. A pre-approval letter indicates to both real estate agents and sellers that you're financially able to buy a home, and it's expected that a pre-approval letter will accompany any offer you make. How do you get pre-approved for a home loan? Step number 1, get your free credit score. Know where you stand before reaching out to a lender. A credit score of at least 620 is recommended, and a higher credit score will qualify you for better rates. Generally, a credit score of 740 or above will enable most borrowers to qualify for the best mortgage rates. Keep in mind that the score you find and the score the lender gives you may vary slightly. Credit Karma, while a good resource, does not always accurately reflect the information the lender will use to determine your qualifying credit score. Step number 2, check your credit history. Request copies of your credit reports and dispute any errors. If you find delinquent accounts, work with creditors to resolve the issues before applying for a mortgage. Step number 3, calculate your debt to income ratio. Your debt to income ratio, or DTI, is the percentage of gross monthly income that goes toward debt payments, including credit cards, student loans, and car loans. Lenders prefer borrowers with a DTI of 36% or below, including the mortgage, though it can be higher in some cases depending on the lender and loan type. Step number 4, gather income, financial account, and personal information. Personal information includes Social Security numbers, current addresses, and employment details for you and your co-borrower if you have one. You'll also need all bank and investment account information and proof of income. Documents you'll need to get a mortgage pre-approval letter include your W-2 tax forms and 1099s if you have additional income sources, and pay stubs. 2 years of continuous employment is preferred, but there are exceptions. Self-employed applicants will likely have to provide 2 years of income tax returns. If your down payment will be coming from a gift or the sale of an asset, you'll need a paper trail to prove it. Step number 5, contact more than one lender. Comparing offers from multiple lenders can help you compare rates and fees and save you thousands of dollars over a 30-year mortgage. Going through the mortgage pre-approval process shouldn't hurt your credit score. FICO, one of the largest U.S. credit scoring companies, recommends confining those applications to a limited time frame, such as 30 days. Thank you for continuing to trust us as your preferred real estate experts. Brought to you by the Knopfert Group, powered by Better Homes and Gardens Real Estate Alliance, Wichita, Kansas.